Okay. Um, this is this is a gold analysis. So I'm doing like a pre-London market analysis for gold. So today is currently Wednesday the 19th of July, right? So looking at gold on the weekly time frame, obviously we've been seeing price expanding to the upside, right? On gold, we've had um, consecutive bullish candles, right? So far, so good. The weekly candle is bullish, right? And we can see price where price currently is at the moment, right? And this could be an area where we could potentially see retracement. In my opinion, we could see some potential retracements, right? We could even go below this week's opening price, maybe before we could get a rebound, maybe to the upside. And why do I think this? Right? Or why am I saying that this could be a potential area for rejections or for a retracement? We have this breaker, right? This breaker candle right here. So you can see this bearish candle where price pushed to the downside, and then you can see where price rallied to the upside with these bullish candles, right? Before breaking lower. So this is what we consider a breaker block. So this is a weekly breaker block. Obviously, it has been retested in the past and it has taken price lower. So I do not expect price to reverse all the way. But I do expect some form of retracement from this level because this is a weekly PDRA, right? Until price breaks above this PDRA, right? And stays above it before I can continue to target this buy side liquidity up here, right? But for now, I'm looking to see if we could get a reversal. And today is Wednesday, right? So we could see a midweek reversal on Wednesday. And yeah, so today is a good day for a midweek reversal to set probably new lows. So for instance, let's say price reverses, takes out Monday's low and sets a new low. That Wednesday's low will now become the new low of the week, and we could then go for the highs of the week on Thursday and or on Friday, right? So this is a good weekly level to note, and this is why it's important to start your analysis from like a higher time frame, the weekly. Most people start their top down analysis from the daily time frame, and that's not proper. Your top down analysis is supposed to start from at least the monthly time frame, right? But we've been going over the monthly time frame consecutively, which is why I just started to look at the weekly time frame. So on the daily right now, we can see we had a huge expansion, right? We had a huge expansion above this previous high, 1968, right? And you can see where we have equal highs, right? So we have these highs, and then we have this fair value gap. So ICT makes mention of the fact that market will only move for one of two reasons. It's either it's going to take out liquidity, that's buy side liquidity or sell side liquidity, or it's running to fill an inefficiency, that's an imbalance, right? So price will only move in a direction for one of two reasons: sell side or buy side liquidity or inefficiency, right? And what do we have here? We have buy side liquidity, we also have inefficiency. So this will be acting as our draw on liquidity, right? These are our higher time frame premium arrays, right? And obviously, what I'm kind of expecting, I'm not expecting price to move above here immediately. I don't know. For me, I'm not expecting price to move above here immediately. And the reason is I'm expecting this to be like a more engineered liquidity, right? So a lot of people already see this level as resistance, right? And you can see that price already reacting off of that. So what I do want to see, like I said, if price does reverse and takes out the low of the week, which is already Monday, if price takes out Monday's low, let's say retest this BPR or even comes down to retest this other block, right? You can see we have these two down candles, which is another block. Again, you see I marked out the high of the candle and the body of the candle, right? Those are the two levels. high of the candle, bottom of the candle. So it could come into any of these levels, either the BPR or this level or this level. Right, let's say it does a deep retracement like this, then I can be looking for buys. Why? Price will be below the opening price of the week, right? Price will be below the opening price of this week, which is a good level because if we're expecting a bullish week, buying below the opening price of the week will be a very discounted price, right? So if we do get that rejection, obviously we have engineered liquidity because a lot of people will be looking at a pullback, right? If price makes a pullback, an instant pullback, a lot of retailers will be looking to continue their shorts to the downside, right? And that offers liquidity, right? So for instance, let's say the market drops from here and then makes a reversal to this level, a lot of people will be looking to take shorts like this, right? A lot of people will use their Fibonacci's to measure retracements, and they will take shorts like this because they'll feel maybe they missed out on this entry, and with the speed at which market could move, right, there's FOMO. So some people will be entering below here. Obviously, some breakout traders will be entering below the lows. Some people will be waiting for the retracement, and then where will stops be? Stops will be above here. But what do we have resting above here? Equal highs and an imbalance, right? So that's what most people don't take account of, is the fact that there's equal highs above here and imbalance. So what will price most likely do, right? From experience, if they are to take a trade like this, if they are to take a setup like this, what price will most likely do is this, right? So this is why I said if price runs out the current low of the week, I'll be looking to be a buyer, right? I'll be looking to be a buyer at that level. So this is from the daily time frame, right? And something else I can see is we can look at the momentum on this candle. Let's go back to the daily. Let's go back to the daily time frame real quick, right? You can see the momentum on this candle, right? On this daily candle, on this daily bullish candle, and that looks like a breakout candle, right? You can see we took out these highs, and obviously when price takes out this kind of when price takes out highs like this, that's when people want to chase, right? Just like this candle right here, people want to chase it. People want to chase it. People want to chase. So when this happens, people want to chase. Why? They miss out on moving. They fear missing out on the move, right? They fear missing out on the move to the upside. So you can see this candle, right? If someone sees this candle and they chase it, let's say they were not a buyer after this candle, and then they see this candle, how it expanded, they're like, this candle expanded and then expanded again. So as this one has expanded, probably they want to get in on buys again so that they will not miss out on the next expansion to the upside. But what they fail to see is the fact that price has taken out a high, and majority of the time when price takes out a high, there could be a reversal, right? Because stop orders or liquidity has been taken from the market, right? And currently, right now, they could be engineering new liquidity, right? They could be engineering buy side liquidity to induce a couple of sellers, right? Generate liquidity, engineer liquidity above these highs, and then run it. Obviously, my analysis can be wrong, but that's the reason why it is my analysis, and that's the reason why it should not be taken as financial advice. It should not be taken as a signal, right? Do not take it as a signal. This is just me getting used to building a daily bias. So for me, I'm expecting to see price make a retracement, right? Obviously, price might not run this lows, but from my own experience, it's so much better when price runs out old lows and old highs, because I'd rather buy below an old low and I'd rather sell above an old high, right? That's just my preference. Dropping down to the 4 hour time frame. Okay, there's not much to see. Let's drop down to the hourly. Let's drop down to the hourly. So I think yesterday, yeah, it was yesterday, I talked about this trade going into 1968, and I said how I took off 80% of the trade here, took off another 10% above this highs, and another 10% will be taken off at 1968, right? That was my ideology going into this trade. That was the trade management I was using you can see this trade ended up doing like a 5.7 hour, which is good, which is like it's good to see. Good to see, right? And then there was another trade. This one was like a 1 to 8, but this was on a 1 minute time frame, right? Again, there was a buy below the opening price of the day. So this is just me looking at the strategy that I'm currently testing, where it's like, okay, I'm trying to buy at a discounted price. So if I know it's going to be a daily candle, if I know the daily candle is going to be bullish, right? If I know the daily candle is going to be bullish, I want to be a buyer below, right? So let's look at if let's look at something right here. Candlestick anatomy, right? Let me use this. So we know that for a candlestick is going to be an opening price, right? We know that there's going to be a low, right? We know that there's going to be a high, right? And there's going to be a close, right? So let me draw this up a bit, and then a close, right? So I want you to look at this, and I want you to look at this, right? This anatomy, right? This drawing I have here. So we know that this is the opening price, right? And then the price makes a low, and then the price makes a high, and then the price closes. Now this is for a bullish candle. So if I'm expecting today to be a bullish day, right? Whenever I see the opening price of that day, which is here, right? Any move below it is a manipulation. This is the actual distribution. The move to the upside is the actual distribution, right? And then there will be a closing price. That is because I'm expecting this candle to be bullish, right? So if I'm expecting the daily candle to be bullish, what does that mean? What am I looking for, right? I'm looking to be a buyer below the opening price, because any move below the opening price is basically a false move. And that's the ideology I'm using to buy gold right now. That was the ideology I used to frame this trade. Obviously, this was not a live trade. Like I said, I'm not taking any live trades. I'm just marking out um, price action, right? And just observing. And I've done backtesting. I've backtested this, right? I've done backtesting on this. So there's a good ideology behind the strategy, right? But you need practice to get used to the time of day you want to be trading and all of that. So there's a little bit more technicalities. This shaded area is the Asian range, right? So as you can see, I was a buyer below the opening price. That entry was from the 1 minute, and then obviously I had my first target was this equal highs, right, which was like a 1 to 4.6, right? That got hit, and then obviously you didn't take off 80%. You move stop loss to break even, and then second target was 1968, which was that high from the higher time frame that got taken out, right? So if we use the same ideology today, I said I'm expecting to see today be a reversal. So what does that mean? I want to see any move I see above the opening price, like this. If I see price come above the opening price, what am I expecting? I'm expecting to be a seller at that high, right? So if price makes a run above the opening price, right, I would want to potentially be a seller, right? I would potentially want to sell this market all the way to the downside, right? And this is how I'm framing these trades, right? This is how I frame the trades. This is my ideology going into everything, right? That's my ideology going into it. So yeah, this is my. I hope I was able to share a little bit of value for whoever is catching on to what I'm saying. If you're not catching it, then over time maybe you will. Um, Obviously, this is not financial advice, and I'm not telling anyone to copy the strategy. Instead, follow the process that I'm following. That will help you develop as a trader. Instead of trying to like follow everything I'm doing, you're not really going to develop. You're just going to build dependence. So it's so much better for you to start doing your analysis the same way. Maybe in the morning, you just go over the charts, look at the opening price, look at all of that. And the reason like I said, my goal is to become a gold day trader, right? I want to be able to day trade gold. And being a day trader does not mean trading every day, right? But if I'm seeing good setups, right, let's say for a whole week, if I am able to get an entry 3 times a week or 4 times a week, that's good. Because if I'm trading, if I get an entry 3 times a week or 4 times a week on the lower time frames in the same direction, right? It has to be in one direction. Not something I've also come to understand. Is like when you build a daily bias. If my daily bias is bullish for that week, I want to be trading in the same direction. So like you can see, I've had a buy on Monday. I've had a buy on Tuesday, right? Even though I'm expecting the market to drop today, I would not be trading that, right? I would rather wait for price to reprice below the opening price of the week, right? And then be a buyer again, right? And if price doesn't make that move to the downside and continues to run higher, then I will just let price run into that PDRA. I'd rather be a seller from that daily PDRA, right? Rather than being a seller right now, because that's me trying to call the top of the market, which is not advisable. So I'll end this video here and I'll see you guys in the next one.